Welcome back to the Link platform. My name is Zoe. If you have been following our channel for a while, you might be familiar with this next slide. It summarizes one of the biggest reasons we started this channel. Billy and I became aware that as freelance investors, we have access to so many different investment tools, including easy equities. However, the information that is available out there is not easy for everyone to understand, especially if you don't have a financial background. Our aim is to bridge that gap. To that end, we introduced a segment called This Week in Markets, where Billy shares his views on the events that caused moves in the markets over the past week. This video will be the first in our new segment called Personal Finance, where we guide you on how to use the information that Billy shares to your benefit by taking charge of your investment journey. Easy Equities is fairly user-friendly and intuitive, but based on a small survey of our closest friends, we realized that there are so many cool and interesting features on Easy Equities that people don't use, or they just simply don't understand them. In this video, we will demonstrate how to use these features to optimize your investments. Towards the end of this video, I will add little nuggets about how to quickly evaluate an instrument and make your final buy or sell decision. This video is not sponsored by Easy Equities. Let's start with the basics. When you log on, the first thing you'll see are 4 different colored tiles. These represent the different ways in which you can invest on Easy Equities. I'm sure most of you are familiar with the first one. The second one is a tax-free savings account. The third one is a US dollar denominated account where you can invest in different instruments that are listed on the New York Stock Exchange. Using this is surprisingly easy. All you need to do is load money onto your Easy Equities account and convert it to USD. Then you're ready to go. The last one is your property investment tile that you would need to activate if you haven't done so already. Next, we'll use the RAND account to demonstrate how to look at the different instruments available to you. If you click on the invest icon in the bottom ribbon, you'll see a list of different equities that you can invest in on the JSE. These stocks are classified into different categories, including their respective JSE sectors. The Thrive category is a cool feature that we will touch on later. You also have access to exchange-traded funds, or ETFs for short. These are similar to unit trusts, except they are listed on the JSE and have lower fees, since they are usually index trackers. It's an easy way to invest in a group of equities or bonds without the hassle of choosing one specific company to invest in. If we use the top 40 ETF as an example, you will get to invest in all the companies that are included on the top 40 index, but you will do so at a low cost. In addition to ETFs, you have access to ETNs. These are exchange-traded notes. These are very similar to ETFs, but think of this as an unsecured loan that you are giving to the underwriter, where the return on that loan is based on the performance of an identified index. ETNs, like ETFs, give you access to instruments that are hard to access, like commodities or currencies. However, unlike ETFs, you do not own a piece of the underlying instrument, so that introduces credit risk to your portfolio. You can invest in cryptocurrencies, unit trusts, baskets, and bundles. The last 3 are also similar to ETFs with a couple of technical differences. Unit trusts are actively managed by professional investment managers like Signia, Sanlam, Coronation, Satrix, ABSA, Allen Gray, just to name a few. Investment managers follow different investment strategies and they do not just track an index. Hence, they will charge a higher fee on unit trusts compared to what you'll pay on ETFs. Now that we know what is available, how do we decide which instrument to buy? The first step is research. This is very important. You can use our videos from This Week in Markets as a point of departure. In the very first episode of This Week in Markets, Billy spoke about the key themes that we are faced with, such as high interest rates, elevated inflation rates, and how the consumer is facing pressure from all of these. He also highlighted key sectors that one should look at in this current environment. I will link this video above. We'll use Amazon as an example. Equities collates a number of articles that you can refer to in your research to see what is going on with the specific instrument. If we look for the research on Amazon below, you will see that AI is a key focus area since ChatGPT became mainstream. You'll also see that around the 29th of July 2022 or 25th of July, we saw a number of US companies, including Amazon, reporting their results. After doing your research, you want to look at how the share has been performing relative to where it has traded before. As a freelance investor, you won't have access to or know the detailed valuation methodologies that investment professionals use. However, there's a quick rule of thumb that you can use. Looking at Amazon, you'll see that the share has returned close to 20% to investors over the last month. But if you look over a 3-month period, you'll see that the share is down 1.7%. That means if you bought the share 3 months ago, you would have lost almost 2% of your investment. But if you invested a month ago, you would have made almost 20% on your investment. So timing and research is very important. You want to look into why these moves were so different over time. To do this, you want to look at a longer period of time. Let's say 1 year for our example. This chart shows you that the share is currently trading at 32.7% lower than it was a year ago. You know that almost a year ago, the geopolitical tensions began. Around the 22nd or somewhere here, the 27th of July, the share recovered slightly. We know from the Equities research that around that time, Amazon released results, which means that the results at the time gave investors hope, and you'll see that during that time, the share price went up. After which, consumers started coming under pressure as the central banks raised interest rates. When that happened, you see the share trading lower over time. Consumer financial health is very important to the operations of Amazon, as you already know. That among many of Amazon's operations is that it is an e-commerce retailer. But generally, you want to pull from a number of different sources to build a full picture for yourself. Now that you know that the share is trading 32% lower than it was a year ago, you need to think about whether you believe that it can return to its previous highs. In the context of the current environment, as Billy described in the first episode of This Week in Markets, if the answer is yes, then you can buy the share. If the answer is no, you can keep watching the share. Easy Equities has very cool features to help you watch a share. You can add the share to your watch list. You can also add an alert. Adding an alert costs 1 credit. You can buy credits in the menu option that I will scroll to right now. If you scroll below, you see My Easy Credits, and the cheapest available credit package that you can buy is 10 rands. Once you have bought your credits, you can navigate back to your invest ribbon in our Easy Equities USD account that we were busy with, back to Amazon, and you can then create an alert. When creating an alert, what Easy Equities will do is it will give you a notification when the price goes above a certain price point that you've set or below a certain price point that you've set. If you have decided to buy the share, there are many different ways in which you can do this. First, you have the limit order. That means you will buy the share when and only if it is less than or equal to a certain price point that you will set below. The second thing that you have is called a stop or break order. This means you only want to buy the share if it is equal to or goes above a certain price point. If you just want to buy the share at the prevailing market price right now, or when the market is open, you can click on the Buy Now option, which now reads Buy at Open because the New York Stock Exchange is currently closed. And then you can enter the amount for which you want to use to buy these shares, and it will tell you how many shares you can get for that amount. You also have a fourth option, which is recurring. This means you will buy the share multiple times at a set period. You can either do this monthly, quarterly, or annually. You also have the ability to choose on which day this happens. And if you've chosen monthly, you also can choose on which month this will happen. You have the ability to choose whether the amount that you've entered above will be inclusive of transaction fees, or if that amount will exclude transaction fees. You have the option of a payment method. In your USD account, you can only use your user account available funds. But if you're using your Rand denominated account, you also have the option of a debit order. There are a number of key things to remember for long-term investors. The first one of which is that time spent in the market can really make a difference. That means usually, the longer you stay invested, the higher your returns can be. Timing is also very important. As you saw with Amazon, when you actually buy the share matters. Remember that gains and losses are not realized until you sell the instrument. So it is very, very important for you to do your research and to know when to keep holding a share when it is currently underperforming and when to cut your losses and go. I know a lot of people who look at their portfolio performance and panic on a daily basis. This kind of behavior can lead to many, many mistakes. Above all else, there are 2 golden rules for long-term investors. That is, buy low and sell high, and don't put all your eggs in one basket. The last feature that we will discuss is Thrive. This is Easy Equities loyalty program, where you can complete 4 different learning activities every month and get up to 100% discount on your trading fees. Each of the 4 activities will give you its own level of discounts, and if you complete all 4 in a month, you'll get 100% discount on your trading fees in the following month. How cool is that? You can access Thrive on your Easy Equities app by clicking on your profile picture there, scrolling down to Easy Equities Academy, and then signing up to the Easy Equities Academy so that you are able to access those discounts through their loyalty program. That brings us to the end of our episode. I hope you learned lots of exciting new things. If there's a tip or a trick that you use on Easy Equities, please let us know in the comments section below. As always, remember that whatever you do this week, keep your best foot forward. If you enjoyed the video, please like, subscribe, and share our channel with your friends. We'll catch you on the next one.